Morning, everybody. It's the 10th of June. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate. You all right?
Yeah, not too bad, thank you. How are you?
Not great because it's a bit cloudy.
Yeah, it'll be getting better soon, though.
Oh,
Forecast
good.
for it to shift on and get some nice bright sunshine again. So
Nice.
all good. Okay, interesting day ahead in terms of data and discussion points. And in terms of market movement, yesterday there was a little bit to keep us interested, so we'll get stuck into the charts very shortly. In terms of sort of market highlights and what's moving markets or what's set to move markets, we've got a key decision today at the ECB meeting, which takes place at 1:30. Well, sorry, the press conference takes place at 1:30. We've got a rate decision before that at 12:55. They'll be meeting today, and they'll be discussing the need for reducing the aggressive stimulus that is currently in place. The ECB in the past has tended to err on the side of caution, given insufficient evidence that the economic rebound from the pandemic is sustainable. So we'll have to wait and see what they say. Very interesting as to whether or not they will do anything or whether there be any tapering talk. So keep your eyes peeled for the data later on today. In terms of stocks, we've seen the meme craze has been revived. We've seen a host of names now garnering attention from retail traders, which include some stocks in various areas of the market, but particularly focusing on these ones that have been heavily shorted. Obviously, the Reddit crowd have been tending to target those sorts of names. The US regulators have called for a broad-based review of stock trading rules, so there may be some sort of restrictions being put in place potentially. Again, it always seems to be after the horse has bolted with these things, so whether or not it'll have any impact or not, or we'll have to wait and see. Also on the agenda, we've got President Biden. Touched down yesterday in the UK, his first overseas trip since becoming president, and he'll be attending the G7 summit. The leaders are putting plans together for sharing vaccinations with a view of ending the COVID-19 pandemic by December. And they'll be talking about resuming travel between the US and the UK as well as soon as possible. And separately, US and Chinese commerce ministers have agreed to push forward trade and investment links between the countries in the first call held since the start of the Biden term. So lots happening. We're going to get stuck right into the chart. Steve's got a gold chart in front of us now. So Steve, I guess you can lead. That looks to be pretty bearish at the moment.
Yeah, we'll just jump to the weekly on gold. We had this hanging man candle last week, and negative. We've sort of retested this downward trending resistance line of this channel. Although this channel is a bullish flag, but we are at the top of it. But it doesn't look like we're going to make any move higher at the moment. And price action today looks to have sort of confirmed that. If we look at the daily chart, we can see a couple of bearish days really, and today is really sort of leading the charge lower. So under a bit of pressure, 1878 trading, really sort of like the level below is 1855 to watch, a break of there, and sort of that could open up a move towards 1820 or 1808. So we're negative on that. On the upside, really have to recapture ground above 1903 to reopen any opportunity to get to the 1916, which is the swing high recently. The 61.8% fib comes in at 1922, and above that, really the level we are focusing on is around about 1965 or 1968. That was a good year. So oil schmoil, oil continues to push higher. We're forming a bit of a doji candle currently on the week with Thursday, so we got another couple of days to go. On the daily chart, we posted a shooting star type candle yesterday, so a little bit nervous about that. Will we get the follow through? We did post a shooting star 3 days ago, and that was followed up by another punch higher into highs we haven't seen since October 2018. So remain slightly positive on the upside in oil. We're in a fifth and final wave, we believe, Elliott wave theory, on a move in WTI crude oil. We're potentially looking at around about, I think it was 76.80, and in Brent crude oil, it's a bit higher than that, about $84. So still looking to sort of push higher there. Looking at indices. Indices holding, sort of like going sideways, really. Not really much to sort of get any kind of sort of idea about where we go next. We're sort of just moving sideways. I suppose you could say it's a little bit toppy looking. But you know, every time we sort of try and we get any indication that this indices are turning around, they come back and smack us in the face. So very difficult to trade from the short side. So we're just sort of going with the flow at the moment. Anything on a 4-hour chart on the FTSE, slightly positive, a bullish outside candle. This obviously this opening hour between 8 and 9 is always a bit frantic. We had a little bit of a dip down towards 70.80 and reacted higher again to 71.12. So quite a decent move over the last hour, and it looks quite positive so far. On the weekly chart, we've talked about the hanging man candle, which still overshadows on the medium term, but short term it's looking quite nice. Opposite in the DAX, the DAX is a little bit under pressure, where we had the daily candles of the last 2 days, hanging man, bearish engulfing, and again another negative candle yesterday, although we did react from the around about the 15,500 level and reacted higher, closed just below 15,600. This morning though, it looks like we're having another go at those lows. Really sort of like support comes in the form of trend support and horizontal support, and for me that comes in at 15,350. On the upside, really need to recapture ground above the 15,600 level to sort of like catch up with the FTSE. Dow Jones as well, the last 3 days have been negative, so this week isn't looking great for the indices for Dow Jones on this, and also NASDAQ has held up a little bit better. Really has been unchanged since Monday. Keeps closing around this level, so we're trading around 13,820. Not really looking to move, but it does look a little bit toppy, reacting maybe from the attempt higher failed. Maybe we have got a little bit of a dip coming, but again, I wouldn't hang my hat on anything. Just react. You've got to be sort of quite reactionary with trades in these indices at the moment, especially trading close to all-time highs. Aussie 200, a bearish outside candle yesterday. That's pretty sore. And China 50. Again, we're in a little bit of a channel here. Little bit flag looking. Could this be a flag moving higher? As I've said before, I think China 50 leads the way, and we're sort of retesting this 17,800 level, which we were capped by for a long time, which we poked through. Obviously, if we fail here, then I think again that turns down on the more medium term picture. So 17,790. Level to watch. Hang Seng, we've got a really weird looking head and shoulders formation, and that's been under pressure for the last 4 days. Nikkei as well, it's reacted from this downward trending resistance line, which I quite like now, and under pressure. So yeah, overall indices under a bit of pressure, and I suppose the only one really bucking the trend this morning is the FTSE. Just have a quick look at cryptocurrencies. I had this as a gun-to-head challenge yesterday, didn't play out very nicely. But so the daily chart, we highlighted the level around 30,000. We managed this week to get down to 31,000, and we've reacted really nicely, forming a morning doji star formation or morning star formation, which looks pretty good. So that lends more bias to the upside. But again, I think it will be short-lived. If we were really to sort of draw a fantastic looking head and shoulders formation, I probably would expect a move, really sort of prices to be capped around about 42, 43,000. Even sort of like fade into that level with 46,000 as being the key level. If we recapture ground above there, then that opens up the upside. If we don't, we remain under pressure. 30,000 is the supportive level for me. A break of there should lead to a really fast move lower towards real support around 18.5 to 20,000. So yeah, that's about it.
Superb, Steve. Nice round up there. Okay, on to the FX side of things. A little bit to talk about here. Dollar index is where I'll start, as I usually do. Let's just get that up on the screen. Okay, so daily chart here. Let's look at the price action yesterday, which is quite interesting. So when we were speaking early doors, when we did our show yesterday, there was some weakness in the dollar index, and we saw it get down to lows of 89.83. But then we saw some buying step in. That sort of came in line with this potential corrective channel that's forming. So we saw some nice buying coming in, and then we saw that backed up today with some further buying. So we're up 0.13% today. So potentially looking for now a push towards the upper end of this corrective channel. It's still difficult to say whether or not it'll be a correction up to these sort of highs of the downtrend that's overshadowing the dollar index at the moment, or in fact whether or not this will be the formation of some sort of continuation pattern, and whether or not it's actually going to be a flag before a break lower and a continuation of the trend. So difficult to say really what's going on with dollar index and whether or not there are any opportunities maybe emerging here, but obviously we'll continue to keep an eye on it and wait and see if we get any further clues. If we look at euro dollar, again, if we look at the flip side of the dollar index chart, just turn it upside down, then we've got this kind of shooting star candle that formed yesterday, and obviously a hammer on the dollar index. So we tried to poke above this corrective channel, potentially forming some sort of flag for a continuation higher, but that was rejected, and we've seen further selling take shape today as well. So obviously this is going to be quite key come around midday, 12:45 UK time, because we've got this ECB rate decision. And then beyond that, at 1:30, we've got the US CPI data, and obviously everybody's concerned about what's going on with inflation. So that's going to be a really well-watched number at 1:30, and we also have bundled in with that US initial jobless claims, which won't be as impactful on the market, I don't think. I think really, inflation is the big number today to keep an eye on. So we'll have to wait and see. Certainly early indications are a little bit bearish, but this could all turn around very quickly later on today. So keep your wits about you if you are trading currencies. If we take a look at Aussie versus the US dollar, not really much to gain from yesterday's price action. It's all still very choppy. We did look as though we were breaking down to the downside, but then we saw a nice big push to the upside and recover all of those losses that we made on the 3rd of June. And since then, we haven't really moved anywhere. If we look at New Zealand dollar, US dollar, we saw this big impulsive move to the downside, and then we saw a bit of a recovery, but we are seeing a bit of selling take shape again today. Volumes have just dropped off quite considerably in recent days. So, a lot of indecision and indecisiveness with that pair at the moment. If we look at cable, well, that's now making that move lower that I anticipated it would make back towards this trend line here, which has been in place since the lows that we posted on the 18th of May last year, and also trying to attempt at closing this gap that was formed between the 7th and the 10th of May. So we're dropping quite nicely lower towards that. We've seen quite broad-based weakness in sterling over the last 3 sessions, as you can see, and I think that's probably having that impact on the FTSE 100 that Steve mentioned. That was the only index in Europe really bucking the trend and moving higher today. So a weaker sterling is actually proving to be beneficial to the FTSE 100 today. So I still think there's potential for a bit of lower price action here on cable. Obviously, if we do get any increased strength in the US dollar, then that clearly is going to help. But we've also got some wranglings going on over Brexit, post-Brexit issues between UK and Northern Ireland. So potential, I think, for this to get down to these levels at 139.85. And I think that would be a pretty reasonable opportunity to consider getting long in line with the dominant trend that is clearly in place on that pair at the moment. So potentially some interesting opportunities beginning to emerge. That's pretty much it on the currency side of things. I'll leave that there. Let's have a look at the gun to the head challenge from yesterday. Okay, so I went long of the FTSE, which made 25 ticks at the 9 p.m. close. It's pushing higher again today. So if anybody did follow me in on that and it's still holding, you're probably looking pretty good. Come 9 o'clock yesterday, I was 1.25
Nice
R2
one.
good. Steve, as you mentioned, you were stopped out on Bitcoin. That found a bit of strength yesterday, although I noticed from your chart the volume wasn't as impressive as it was the day previous when we saw the selling. So I don't know
Yeah,
if
I'm
that's a
sort of
concern.
I thought once it got going, I thought we'd sort of like see a little bit more on the upside, and yeah, it hasn't sort of followed through. So there is potential for a bit of a maybe sort of like this is a bit of a false sense of security, but from a technical perspective, I wouldn't really like to sell it at this level. It's more this is more the middle of the range. I sort of think selling it around 40,000, buying it around 30,000 seems to be the real play. Although there are levels, above and beyond that. Yeah, so I'm not sort of sure about that. You seem to have sort of like held us steady this week. I need to pull one out of the bag, I think, today.
Well, I mean, just in general, I mean, when we started doing this back in October 2019, it was, pretty good trading conditions. And obviously, we saw the pandemic kick in shortly after that, and there was good volatility, which meant there was good opportunities for us to trade on an intraday basis. But in recent months, the volatility really has dried up, as has been indicated by, the classic sort of volatility measures, VIX index, etc. So, we are struggling here to.
Yeah,
We're just treading water. I don't know what will be the catalyst for change. I think, in order for us to be successful at this type of trading on an intraday basis, we need some volatility, and at the moment we just don't have it. So,
yeah. I mean, for me at the moment, the better course of trading is slightly more holding a position for a little bit longer, maybe the more swing trading.
yeah,
So that comes with it can be a similar amount of risk, but just you have to be a bit more patient with it.
yeah.
We always look to sort of like risk 1% on each of these gun to head trades we do, and yeah, you can still risk 1% on slightly more longer term trades.
Yeah, I mean, we're not
But
going to change our approach because this is what we sort of set out our stall to do, is just looking for intraday opportunities, because typically that's what people want. They want to
yeah,
be in and out of the market on a daily basis. So we'll continue to do that. But I don't envisage anything drastically changing on the P&L front until we see some return in volatility, because
yeah,
you
I
need
agree.
bigger intraday moves in order to make some decent R. But we're treading water. I think if we can just maintain around here until some volatility does come back, then keep strict with our approach and risk management, and I'm sure all will come good.
Yeah, I like it, Joe. You've revitalised me with that speech.
Good. I
Thank
know
you
I
for that.
need you to pick a winner for us, Steve, if you can.
Okay, no pressure then. Well, I think I'm going to go against my medium term, longer term feeling in the gold is that we are going higher. It's a bit of a longer term play, like I showed you this morning. We've broken down below the sort of $1880 level. I think that's quite key, really. So I'm going to go short of gold, just based on the break this morning, really. Really target maybe a move towards the sort of 1855 level. Mind you, if we do get there, I think we could easily go quite aggressively lower. So 80. So let's look at what am I going to go for? 3-1, or I'm going to be a bit more punchy than that. I'm going to go 4-1 on the risk reward basis. So my stop will be at 1885.80, 79.7 on this chart that we've just it's short here, 1879 spot 60. The target is the swing low at 1855 spot 79. So that's what I'm looking at now for this. Let's just round it up, because then numbers are putting me off. So there we go. Getting short at 1879.80, stop at 1885.80, and target 1855.80. I'm quite happy with that from a decent risk reward perspective right now.
Cool. Good luck. I'm going to take a look at oil. Just going to go with the flow with this at the minute. Clearly, the demand is pretty strong for oil, as we're seeing, a few headlines that are driving things higher. We saw a little bit of a corrective move to the downside yesterday, as you can see here. But I think overall it looks in pretty good shape. So, clearly decent uptrend there. Multiple touch points over the last few days on a trend line there on the hourly chart. So jumping in now at 69.62. Targeting a move to pretty much $71, so looking for a new high. I'm just going to go below that at 70.99. I'm going to place a stop loss at 69.05. So I'm just looking for 2.6R on oil today. That's my trade of the day.
Nice one.
Just one more thing on the charts. I brought this up a couple of times in the past. This is my chart of so the top chart is a combination of the Euro Stoxx 600, the FTSE 100, and the S&P 500. So three really broad indexes that focus on developed markets. And obviously, when these are moving higher, it means that equities are very strong. And as you can see from the post-pandemic lows, we've seen a really strong move to the upside, although price action is potentially forming a bit of a wedge, which is coming close to maybe a decision point as to whether or not we're going to break out to the upside of this wedge and see a continuation higher, or whether or not we're going to see a breakdown from this wedge and it's actually going to lead to a fairly decent correction in equity markets. As you can see here, we've got this ascending trend line here. And in previous occurrences when we've seen, well, maybe only this one because it was the third touch point, obviously we saw this big move to the downside. I know that was largely unforeseen with the pandemic, but we're back up at these levels again. But more importantly, down here, what we have is a ratio of these broader indices versus their respective government bonds. And this is just ETFs that I'm using to do this. So we've got the European 10-year, the UK gilt, and the US 10-year all combined together. So when we divide them by each other, we form this ratio chart. So essentially what this shows is if the price below here is moving higher, it means it's more favorable to own riskier assets like stocks. If it's moving lower, then it's actually more favorable to own safer haven assets like government treasuries and bonds because they're paying better than what equities are returning. So quite interestingly, we're up at a really massive resistance level. This goes back to June 2014. And as you can see, we've seen a number of points where price has stalled at these levels previously. And what it's led to, as you can see corresponding with these blue lines, is pullbacks in the equity markets when this price has reached these levels. So are we going to see something similar again? What I would say is that previously when we've seen it up at these levels, we've actually seen quite sharp reversals. But where we are at the minute, it's actually more of a rounding formation potentially taking shape. So I don't know whether or not that means anything, but it's just something to bear in mind, suggesting maybe equity markets are a little bit overcooked in the short term and that we could see maybe some sort of pullback temporarily and see maybe more demand for safer haven assets. But of course, we've got lots going on in the markets at the moment. We haven't really seen conditions like this for a while. We've got this inflation number later today, and we've got to find out whether or not the ECB are going to start talking about tapering. So we're potentially at a very interesting point in markets where volatility, really could start to pick up.
Yeah, I completely agree. The fact we've sort of got this sort of rounding top, as you mentioned, rather than like a V shape, sort of makes me sense that there's a lot of people expecting some sort of collapse rather than just one event that causes it.
And when people are expecting it doesn't tend to happen, though.
That's the thing, and it sort of gets a bit more drawn out, and patience wears thin. And do we need to have this flush out to the upside, where people think, oh, they give up and they say, well, it's not coming off. Let's all go merrily dancing down the indice route. Let's get put everything into stocks, and that's when you get the big slap in the face that comes eventually. There's so many things that have disconnected over a long period of time, that something has to give, but I believe it's this. There has to be some sort of reset button, I suppose. Reset button. Oh, don't mention reset. Yeah, but that's what it feels like. But in the meantime, you just got to sort of like wait for it to happen, and then it will feel like, oh, I'm too late to get in. But
Yeah.
that's the way of the world. Options, maybe.
Yeah, maybe at least some sort of protection. I'll keep an eye on those sort of indices that I tend to look at, so the put call ratios, the VIX, etc., just to see if there's any indication of people buying protection. They can often be a good indicator. But anyway, on to the day ahead, as we've mentioned numerous times throughout the video today. ECB rate decision at 12:45, then followed by the press conference at 1:30. There is no change in rates expected, but there is to be some commentary on current inflation and outlook for prices, and whether or not there'll be any sort of discussion around tapering. Then at 1:30, also at the same time as the press conference, we have the US CPI number, which is going to be well watched because obviously inflation is a concern, and this is the latest reading on that. Bundled in with that, we have the initial jobless claims, which is due out at the same time. So potentially an interesting day ahead. Be careful if you are trading any of the markets that are likely to be linked to this. So European crosses or Euro crosses, US indices, and of course US dollar based markets as well. So I think that's pretty much it from us, Steve.
Yeah, nice one, mate.
Cool. All right. Well, let's wrap it up there. We'll be back tomorrow. Good luck if you're trading today, and we'll see you again tomorrow.
Cheers.
Bye bye.